Hey everyone, welcome to this YouTube channel. So in this video, we are going to explain the meaning of mutual fund. We are going to explain it in details, in comprehensive details. So first of all, if you have not subscribed to this YouTube channel, you can just do that right now and click the notification bell so that anytime we release a profitable video, you'll be the first people or the first person to see the video. Thank you very much. Many people have been asking me, profitable man, what's the meaning of the mutual fund? How can we invest into mutual funds? But today we are going to explain it comprehensively. As a new investor, you may have come across the term mutual fund and asked, what is mutual funds all about? In this comprehensive guide on mutual funds for beginners, I will demystify everything you need to know to begin your journey as a mutual fund investor. Just keep calm, take your seat and listen to me very well. Okay, in this video, we are going to explain how mutual fund works, type of mutual funds, why you should invest in mutual funds, things to consider as a mutual funds beginner, and risk of mutual fund investing. These are our curriculum for this video. Now, let's move on. What is mutual fund? A mutual fund is a professionally managed investment scheme, usually run by an asset management company that brings investors together. That brings together a group of people and investing their money in stock, bond, and other security. What I mean by that is that when we say mutual fund, it's like a pool of investment. That means rather than buying a single stock or a single security base like bond, stock, ETF, I will explain that later. So many people come together, many investors, several other investors take their money and put that money or invest that money into one mutual fund. Are you getting me? Like, many people come together. Like in Yoruba, there is something they call ajo. Like when people come together, they put their money together and give it to a financial management to help them to invest it in less risk assets. For example, we have Stanbic mutual fund, we have debit mutual fund, we have capital market mutual fund, treasury bill, bond, and so on and so forth. But all this kind of investment is not just that you just put it in somebody's hand. You put it in those people that have been in this market for a long time, professional people. If you can look at the definition again, it's a professionally managed investment scheme, usually run by an asset management company. It's all those companies that used to manage assets, very trusted, registered company. So when you invest this kind of money, there are different type of mutual fund that will get there. So when you invest this kind of money, so they will be the one that will invest it into maybe stock, real estate, bond, treasury bill, and other securities. You understand? So that is mutual fund. And you can find them in any bank, especially Stanbic Bank. So let's move forward. So the next thing here is type of mutual fund. So we are talking about mutual fund. There are majority of mutual fund, and then any mutual fund they look for, they fall into one of these 5 categories. Money market funds. Number 1, money market funds. What is money market funds? So when they're talking about money market funds have comparatively low risk. Let us go there. We're talking about money market. Have comparatively what? Low risk. Very low risk. This is because they only invest in a select group of high quality, short-term security issued by corporations and the government. So that is what money market does. They don't stress themselves They don't go into high risk business. They are very low in their risk management. And all their investments are towards short-term securities. Amen? I'm not preaching. So, the second one is what? The second one we have here is target date funds. So, bonds, stocks, and other investments are all mixed in one target date fund. The mix gradually changes over time in accordance with the fund strategy. Life cycle funds, also referred to as target date funds, are created for people with definite retirement date. This target date fund is kind of fund that people invest with target date. Okay, maybe by next 50 years I will retire. So they will be investing in this target fund that by this particular time I will move out. Especially for those people that are planning their retirement stuff and so on and so forth. So another one is what? Is equity fund. Equity funds, also referred to as stock fund, invest in business equities. Not all stock funds behave the same. So equities funds are named according to the size of the companies they invest in, such as small cap. Small cap means that is their total market capitalization. Mid cap, large cap, and multi cap equity funds. Others are named by their investment approach, such as growth focus, income oriented, and so on and so forth. Growth fund, for instance, concentrates on stocks with the potential for above average financial return, but may not pay regular dividend. What they mean by equity funds is the kind of another name of equity funds. If we are into financial market, they call it ETF, equity funds. So this kind of ETF, what they do is that they invest into different stock. It's just like ETF, and I will explain that later in another video. ETF is like you have 20,000 naira right now. You cannot buy Amazon stock, you cannot buy Netflix, you cannot buy Tesla, you cannot buy Meta. With all this, your 20,000 naira. But with the help of ETF, you can invest your money into over 50 stocks at once in one unit. For example, we have SP 500, VTG, so on and so forth. Those are the ETF. So, and then in this kind of ETF, you buy a unit. Meanwhile, that your unit comprises different stocks. You understand? So that is the meaning of equity funds. So another one is bond fund. Bond fund invest mainly in bonds. They often strive to earn better returns. Therefore, they have higher risk than money market fund. The risk and return of bond funds can vary considerably because of their diverse range of bond. The last one is index fund. Index fund are also type of mutual funds or exchange traded fund. Now I talk about ETF. Exchange traded fund, ETF, with a portfolio designed to replicate or follow the characteristics of financial market. For example, S&P 500. Index fund and equity fund, they have similarities. So as index fund is considered to provide low operating cost, broad market exposure, and minimum portfolio turnover, regardless of the status of the market, these funds tend to keep their benchmark index. If you have investment into different stock, why buying a unit of ETF? You know, when you buy S&P 500, there are a lot of stocks inside S&P 500, and all stocks cannot be going down at the same time. So they used to balance each other. So anybody that are investing into ETF or something like index fund is more of less risk. You understand? Like less risk. You are not going to lose money like that, because if one stock is not doing well, other might be doing well. So the next thing here is that why you should invest in mutual fund. Why you should do what? You should invest in mutual fund. There are many reasons to invest into mutual fund, and then in this video we are going to explain them one after the other. So the first one is the cost efficiency. Cost what? Cost efficiency. What do I mean by cost efficiency? Although some mutual funds are expensive, most mutual funds are cheap and beginner friendly. Compared to other stocks, mutual funds have a small entry amount you can start investing in. With 5k, 10k, you can start investing into mutual funds. In addition, because you are pooling money with other people, it gives everyone in the fund a buying power that you can't get individually. You understand? Okay, remember the saying that there is strength in numbers. That is one of the advantages of mutual fund, because you are not the only one. Meanwhile, you don't need to look for people to come. The financial company, they have that, so they have been doing that. So you are not the only person there. There are a lot of people pulling their investment there. So the second reason you should invest in mutual fund is diversified portfolio. Investing is taking a risk, which is why it is advisable to invest in multiple assets. However, investing in multiple assets as beginner can be tricky. That is why mutual funds are the most recommended for beginner, because they come diversified. Like they are diversified, they are into different investment. Besides getting return from multiple companies, a diversified portfolio gives you more confidence in your investment journey. So the third reason is low risk. Your investment goes into hundreds of companies and stock, which means there is a low chance of you recording losses if there is a decline. Although some companies may record losses, other companies will record gains. Another reason is that dividend reinvestment. Your investment compounds when your dividends and other interest earnings are reinvested into the mutual fund. You leverage your returns to purchase more units. Like when they are paying you your profit, because some of them pay quarterly, some pay annually. So when your profit comes in, it will be reinvested again. So that is the power of compound interest, and your money will keep increasing. So another one is liquidity. As an investor, if you have a pressing financial need, like shege, like this economy they do you shege, mutual funds are liquid enough for you to sell the units and get the fund in the next or 2 days. The return could be low, though, especially if the assets were liquidated when the fund is currently experiencing a loss. However, because of diversities, mutual funds follow swing are generally less erratic, making them less volatile. Yes. What I mean by liquidity is that you can decide today that, okay, I want to sell all my investment. And you will sell everything. You can liquidate your account today and have your money back in the next day or 2 days. That is one of the advantage of mutual fund. So let's move on. What are the risks of mutual fund investing? What are the risks? There is nothing that has advantage without disadvantage. So let's talk about the risk of investing into mutual fund. Number 1, return might be low. That one is very sure. Mutual fund return might be low. Honestly, it may not be that much. It may not be that much because it depends on your capital. And another thing is that you may take less with mutual funds than you would if you decide to invest into a single stock. So return might be low. Honestly, it might be low. There was a time where I invested a particular amount of money, but I like it. It's better to invest your money and be receiving low returns than invest your money into something that will give you high returns and then will later on liquidate your account. It's better to be watching your money growth. So another thing is that over diversification. One of the key benefits of a mutual fund that is frequently mentioned is diversification. However, there is always the possibility of over diversification, which could raise a fund running cost and erode the relative benefit of diversification. So when your money is put into different places, it can be somehow like, okay, you invest 20,000 naira right now, they put it in first bank, they put it in ETF, they put it in this something. Like, your money is over diversified. Meanwhile, it is also a benefit for you. So another one is that you are not fully in control of the money. You are not fully in the control of the market. So this is pro and a con. If you are someone who likes to monitor the market actively, then you should have favor mutual fund, because the fund manager are in charge and not you. Another one is manager's risk. Any mutual fund performing is based on the manager's experience, knowledge, skill, and investment techniques process. If any of these factors are lacking, it will negatively impact the fund's performance and all unit holders. Another one is market risk. In response to specific occurrence, such as general income and market conditions, regional or global economic instability, or currency or interest rate fluctuations, the price of the price of a particular company asset may be decreased. If anything happens globally, the price might decrease. Like, oh, something don't happen to this price. So, like, if any fundamental news happened, if anything happened, like maybe Facebook, Mark Zuckerberg sacked people, maybe they are not making money, maybe they have issue with government. It always affects their company, and it also affects their stock, and it also affects the market. So those are these risks involving into mutual funds. So let's move forward. Okay, investment cost and forfeit and for mutual fund. Investment cost and fees for mutual fund. The majority of mutual funds require a minimum investment of a few naira or dollars before you can opt in to buy shares or a fixed amount of the fund. If an investor invests 1 million naira with a fund manager and the fund charges a 1% management fee annually, the investor will pay 10,000 naira. Depending on the fund design, such fees may be due monthly, quarterly, or annually. With quarterly payments, in this case, the 10,000 naira is distributed over 4 quarters at the cost of 2,500 naira. So this place, what they are saying is that every investment has something we call manager charges, like management fee annually. Like people that are managing your money, maybe 1%, maybe 0.something%. It's not really something much. So they may be collecting it maybe annually, quarterly. You understand? So any investment or management company you want to put your money into, there is the charges to just like other, maybe when you want to buy a stock or when you want to buy any cryptocurrency on any platform, they have their own charges too. So they will charge you for that. So how to begin investing into mutual fund? So this is where I'll explain it, how to start your investment, and then I'll do the practical aspect for you in the next video that I'll release. So with Cowrywise, you can begin investing from as low as 1,000 naira or $10 for dollar mutual fund. Like, we have dollar mutual fund, we have the one that is naira mutual fund. So in that naira, I have invested 100 naira into mutual fund, and it works. So we'll be using Cowrywise. The reason why there are other platforms you can use, but now I'm teaching you. The purpose of this video is to teach you how to use Cowrywise first, because many people are already friendly with Cowrywise and have been using Cowrywise before. So, and they have trust. There are some trust level with Cowrywise, like they trust them very well. So I don't want to be disturbing you to go and meet financial management or to go and meet any person to help you to invest into mutual fund. There are platforms you can go to invest into mutual funds. So what we'll be doing right now is that we'll be using Cowrywise. So what you need to download Cowrywise. If you want to download Cowrywise, go to Play Store, download Cowrywise app there, create your account and sign into your existing account. You will tap on invest. Don't worry, I'll do the video. So once you get your Cowrywise verified, create your profile, just fund it. Once you fund your account like this, welcome, congratulations, you're now a mutual fund investor. So in my next video, I will show you how to buy mutual fund practically on Cowrywise. We'll also be exploring other platforms, but for now, let's start with Cowrywise. Thank you very much. If you love this content, make sure you subscribe to this YouTube channel and click the like and comment, and also click the notification bell so that anytime I release any video, you will be the first person to receive the notification. Thank you very much. I love you guys.